I'm going to start with U.S. stocks because we did see a little bit of risk off at the start of the month. Everyone's pouring back in. We're getting the 2018 outlooks. People are generally upbeat. But if you take a look at the chart behind me, this is BTV634. It shows that the cost of protection for a sell-off in stocks as measured by the Credit Suisse Fear Barometer, this is skew in options, is relatively elevated, certainly compared to the CBOE's VIX. There is some nervousness out there. Why can't investors just fully buy into the rally?
Well, you're absolutely right that investors are not fully bought in, and that's something we see amongst our clients, private clients around the world. And I think that's a variety of factors. It has to do with geopolitics. It has to do with people anchoring on the great financial crisis. And it has to do with the rapid technology change that we see. But at the same time, as you note, it's not just the U.S. market that's doing well, but it really spans the globe now.
Right. So give us your outlook for 2018 on stocks in general, then. We have Goldman Sachs, for instance, raising its forecast. I think BMO has a target of almost 3,000 in the SPX. What are you looking at?
Well, we look on a 6-month view, and right now we are overweight in global equities. I think, as the world has shown, I'm very pleased with our positioning because it is kind of a risk-on move that we see globally. And so in the global index, you're picking up the U.S., but you're also picking up these other regions that are doing well. And then we've got an overweight in European equities versus UK equities because we think that the UK growth is going to slow a little bit now that this weakness from the pound has come through, whereas the European economy is doing very well.
All right, Mark, over here in Asia, we are watching the Hang Seng likely going to breach that 2007 10-year high above that 30,000 mark, possibly reaching, a fresh high here. But a fellow CIO of yours over at Credit Suisse, John Woods, said this morning to us, every contradictory bone in his body shaking. Which contradictory bones in your body is shaking? What are the highlights that you think could be a headwind to these gains we're seeing right now?
Well, it's, of course, a great question, and it's something that we think about every day. I guess the primary concern that we have is not really around flows, but around this inflation picture. And if we see a pickup of inflation, particularly in the United States, that's going to force a lot of these central banks to start to act potentially faster and choke off the growth because, recessions, say in the United States, are usually coming out of a tightening cycle from the central banks. So I think that's one of our key concerns. We have some others, of course.
Mark, I want to pick up on this point because, Yellen and the Fed certainly saying one thing, the Fed trying to tighten policy, and then we have the bond market. It's not really playing along. If you take a look at the yield curve, as we've been discussing, it keeps flattening, and traditionally that's a sign of recession. What's your interpretation of what's going on with that curve at the moment, and why has the Fed been unable to push it up?
So, I think that if you saw the curve invert, that would be a sign of recession, and obviously that's something we're watching for. We don't anticipate that happening. But I think that the long end of the curve is responding to some of the comments that you just showed by Janet Yellen. And a lot of the recent commentary from Fed presidents that they simply are no longer sure that inflation will necessarily pick up again. And I think we're seeing that in the 10-year. And that's a very interesting phenomenon. So at the same time they've been tightening and trying to get off that zero bound to prepare themselves for future financial crises, they're also concerned that inflation just hasn't been responding the way they anticipated.
Let's try this chart. It's a chart showing the RSI for Bitcoin, and on that basis, it's showing up in overbought territory. It's actually been 2 years since it's been firmly into oversold territory. I feel a little bit silly applying an RSI indicator to a cryptocurrency, but It's an indication, I guess, of the amount of interest in this asset at the moment. How many calls are UBS advisors currently getting about this activity in Bitcoin?
Well, you're right to pick on this topic because we have seen a lot of interest in it. But it's not like our ultra high net worth clients are doing a lot of investing in Bitcoin and other cryptocurrencies, but everybody's interested. And of course, we're very interested in the underlying technologies, which could be transformative for all kinds of payments and legal documentation and other things going forward. But you have to separate, individual Bitcoins from the blockchain technology.
Right. So why aren't they trading? Is there just a feeling that it's a bubble? It's poised to collapse at some point? The market's not deep enough? Maybe there's restrictions. Maybe they all work at JP Morgan. I don't know.
Well, I mean, to me, when I think about an investment, the first thing I think about is when would I get out? When do I know that I've reached the valuations that I would exit? And it's really impossible to know for many of these currencies. It has a lot of speculative characteristics. And I think to compare it to gold, I mean, gold has been lusted after by human beings for thousands of years.
Right.
I haven't seen any cave paintings referring to Bitcoin, so it's hard to put it in that precious metal category at the moment.
We talk about Bitcoin in and of itself, these cryptocurrencies, but the other aspect is just kind of the sideshow, which is it sucking away liquidity from other markets here, FX markets? It's behaving a little bit of a safety haven play, Mark. And so will we get to a day where you can't ignore Bitcoin because it is drawing liquidity away from your traditional markets?
Well, I think that we're a long way away from this market being of a size that it's going to matter. I mean, the idea that it would cause liquidity concerns, is very far away. It's still relatively small. I think what it does symbolize, though, is kind of a bubble in disruption, whether it's political leaders or technologies or mistrust of financial system. There is a craving out there to find things that are disrupting old technologies. And interestingly, we've seen a little bit of backlash against that as well now, post the elections and the way that technology firms are getting more scrutinized around the world. So the future is interesting as the pendulum swings one way and the other.
When you take a look at, I want to start off with Angela Merkel here. When you take a look at just what's happening domestically there, do you fear that that's just going to ripple effect onto the European stage and hence the global stage? Where we take a look at direction for growth from Europe, that's going to be hamstrung by internal politics in Germany.
I think that global investors are slightly disappointed about this process in Germany because they would love to see closer European integration. And I think that the elections in France really gave them hope. But that said, I mean, this is Angela Merkel is the most seasoned politician in the world, and she has not yet begun to fight. I think we shouldn't give up on her yet getting the coalition she wants and moving Germany and Europe towards the future that she wants. And keep in mind, these politics have really had little effect on markets in Europe for some years because that growth picture in Europe has done a lot better. And so we want to be careful before we over-apply a political overlay to what is going on in a tremendous growth story.
Yeah, it is. I mean, there's no doubt about it, and that's why we're worried about it, because how can it continue in 2018? That's number one. Number two, we have the pressure of Brexit talks. This removal of one of the major players in the EU and the consternation that it causes the markets there.
Well, I think that the Brexit topic is slightly different, and it's one of the reasons that we're positioned with the overweight in European equities and the underweight in the UK equities. Now, one of the things that we see is that they're not making tremendous progress on any aspect of the Brexit negotiations at this point, and it's likely to get pushed out towards that 2019 deadline. So in a way, it's kind of the calm before the storm around Brexit.
Mark, very quickly, I like to ask this every once in a while. When do we start thinking that the way the UK rates and FX market is behaving, you know, the BOE raising rates and you see the pound falling, that seems a little bit emerging market-y to me, right? Like, are you thinking about the UK as an emerging market at this point?
No, my wife is of British descent, so I will never be allowed to do something like that, and nor would I want to. I think that, look, the UK it's an important pillar, and importantly, they've done a very good job using central bank policy to help that economy over time. Obviously, this is a difficult period, but both the UK government and its central bank are going to start to respond if some of this Brexit concern starts to really impact the economy.